Hello friends, good morning to all of you, and this is the video related to the RBWM JAIIB, and it is about the chapter number 6 from the module B of the RBWM, that is Retail Banking and Wealth Management, that is PDP, that is Product Development Process. That's about the product development process. Now, what is product? Product is anything which basically do provide the satisfaction to the consumer by the customer. That is basically the product, right? So anything which provide the satisfaction to the customer, that is said to be the product. And in bank also, the bank services are providing the satisfaction to the customer, so that is also a product. What different type of services are being provided, like current account, recurring account, or let's say saving fund accounts, term deposits, or loan products. So these are the different products for the bank. So product is anything that delivers a satisfaction, that is basically utility, that is benefit, and whatsoever the return which is desired by the customer, if that is being given, so that is basically said to be the product. And under the product, we are having the PLC, that is a product life cycle. So when a product is there, it basically goes through the different levels, goes through the different stages. Like the stage one is the introduction stage. The stage one is a introduction stage. Now the sales volume are very low because people do not know about the product at this particular stage. Revenue will be low. So we can say the sales will be low, the revenue will be low, right? And further, also the customer awareness is very much limited at this particular point of time. That is very much limited at this particular point of time. This is very much limited, and it takes time so as to basically create a image in the mind of the customers. So it's definitely is going to take time, right? The second stage, it's the growth stage. The second one, it's about the growth stage. Now, when the growth stage is there, in that particular scenario, the sales volume basically do increase. Consumer awareness is now there, and definitely there is a rapid increase in the demand of the product. So people before, and when it was just introduced, people never knew about the product, but now the people know about the product. Now people do know about the particular product, and after that, the sales volume are increasing in the growth stage. The awareness is increasing in this particular stage. People know now the product now. Consumer awareness is increased. And it may also be the case that you must have crossed the BEP. BEP is break even point. Like previously, it might be the case that you are not making any kind of profit, but now it might be the case that you are generating profit for the organization. It could be the case. That's the growth stage. And third stage, it's about the maturity stage. This is a third stage, that is a maturity stage. Now the sales growth is stabilized somewhat. And now you are having a wide customer base with you. You are having the maximum sales and maximum profit at this particular point, right? Because there is high inflow of the customers, right? And also the competition is basically higher at this particular point because the new competition might be there, the product alternates might be there, right? So that's the maturity stage, but you are at your maximum stage. You are at your maximum stage. The fourth one, it's the decline stage. That's the final stage. That's the decline stage. Now when the fourth stage is there, that's the decline stage is there, there are new substitutes. It might be the case also that the customer preferences might change. That could also be the scenario, that the customer preferences might change, right? And also the sales volume are going to decline. Now previously, up to the maturity stage, the sales were increasing. So in introduction stage, the sales were very low. In growth stage, the sales were increasing rapidly. In maturity stage, those were stable enough, but now those are declining. The profits are also declining. And further, if you're not going to manage your product, let's say if you're not adding the value toward it, you're not adding any other features toward it, so in that scenario you will lose the market. You will lose the market, and eventually your product will obsolete from the market. So this is about the stages of the product life cycle. Stages of the product life cycle. And this is very much important. So there are four stages: the introduction stage, the growth stage, maturity stage, and the decline stage, right? Now let's have a look at the products. Now let's have a look at the products. We are having the different type of products. Like we are having the uh, core products, and we are having the augmented products. The core product and the augmented product. Now what is core product? What is core product? Like the basic product of the business, that is said to be the core product, right? Basically the primary services which are being offered by the bank, those represent the core product for the bank. Like for the bank purposes, the core product, we can say it's about the saving product, or let's say the cash credit, the recurring deposit, term loan, overdraft, current account, saving account, term deposits. These are the core products. These are the foundation of the banking operations, we can say, right? And when we're talking about the augmented product, these are the enhanced versions. We can say these are the enhanced core products. Simple as that. We can simply say that these are the enhanced products, right? Enhanced core products. Clear with it? Understandable? Do confirm at the earliest. Kindly do confirm at the earliest that if you have understood this particular part so far. Right? So the next one, I told you about the core products. We know about the augmented product, but now let's know about the features of the core product. Now, when we're talking about the core product, as I told you, these are the foundation. These are the foundation of the business, the core products, right? And further, these products are having the stable life. These basically remain stable. And further, they are very much stable in the growth stage. Like the core products are in the growth stage. Like if we talk about the four stages, we know there are four stages: introduction stage, growth stage, maturity stage, and further the decline stage, right? And these core products are, let's say, always in their growth stage. They're always almost remain in their growth stage because these are indispensable to the customers, and these do not require aggressive market. These do not require the aggressive market. On the other hand, when we are talking about the augmented products, the augmented products are the enhanced versions of the core products. And let's say we are going to combine two or more core products, and one augmented product will be there, right? And these products might increase the customer satisfaction, right? So let me just give you a simple example. Now let's say if you are having a simple basic saving bank account with the bank. Now that is a core product, right? And if you are giving the bank is giving you the checkbook facility, the ATM card facility, the debit card facility, that is a core product only, right? But now let's say if the additional services are attached to it, like the doorstep banking is attached to it, then it will become what? Then it will become the augmented product. Then it is going to become the augmented product. Clear with it? Kindly do confirm, right? So that's about the core product and the augmented product. Now we are having the multiple products in the retail banking. Like we are having the deposit products, we are having the credit products, we are having the other products and services. Now, when we are specifically talking about the deposit products, We are having the demand deposits, like we say to be CASA, current account, saving account, deposit. And when we are talking about the term deposit, it's basically the recurring deposit and the fixed deposits. We already know about this, the deposit products. Specifically, when you're going to hold the funds in the banks, when you're basically going to hold the funds in the banks, but not for a fixed time period, not for the fixed time period. That is basically your demand deposit. That is a demand deposit, right? So demand deposit is what, like you're going to place the funds in the bank, but for transaction motive, not for the saving motive, for the long duration. So we can say the demand deposits does represent that we are going to deposit the funds in the bank, but those are withdrawable on demand. We are not to give prior notice for the withdrawal purposes, right? So these are going to provide the liquidity. So these are highly liquid, right? And further, these are for transactional motive. So these might include the saving account deposit or the current account deposit. Combinedly, we say to be CASA. Okay. And specifically, when we're talking about the saving deposits in case of individuals, when let's say a normal account is being opened for the transaction motive, that's a saving deposit. That's not for business purposes. For day-to-day life transactions, you open the account, and that's a saving bank account. And the bank also pays you a nominal interest rate upon it. So you earn nominal interest rate also. So these are intended for long-term savings in general. It's basically like for financial goals, but still it's withdrawable without any notice. So you earn interest, as I told you, and the money grows over the time. Withdrawals are allowed, right? But these are limited. Like it's not like unlimited transactions in the saving bank account. And also the balances in the saving bank account is secured. It is secured. There is a guarantee which is available. Like if you have placed a balance in the saving accounts or in any of the accounts, the deposits are considered safe. Why? Because a deposit insurance is available by the DICGC. What is DICGC now? This is Deposit Insurance and Credit Guarantee Corporation. Deposit Insurance and Credit Guarantee Corporation. That's uh, basically a institute, we can say, organization, would say, which basically ensures the deposit. And up to what amount the insurance coverage is available? Up to the amount of rupees 5 lakh. That is basically secured, right? And also, these are considered safe due to regulations and the deposit insurance, as I told you. And further, there might be some guidelines related to the minimum balance requirement in some of the cases. Now, let's learn about one of the product of the saving bank account, that is BSBDA. That is Basic Saving Bank Deposit Account. Now, previously there was the traditional bank account, but now that is replaced by BSBDA. That is replaced by the BSBDA, right? So, what is the motive? That we want to provide the basic saving bank deposit account features to the individuals. So, in this scenario, there is no minimum balance is required. There is no limit related to number of deposits. You can make any number of deposits in the month. And further, the maximum number of withdrawals which are allowed is 4 withdrawals in the month, including the ATM withdrawals. So that's the restriction related to withdrawals. So related to withdrawals, that's the restriction, that you can be uh, withdrawing the amount only 4 times in the month, including the ATM transactions. Only 4 withdrawals are allowed. But related to deposits, there is no restriction. And further, BSBD is subject to KYC AML guidelines. Like if you have fulfilled the KYC AML guidelines, the due diligence is done properly, then it will be the BSBD account Otherwise, if the minimalistic KYC ML is done, then it will be a small account. We'll further be learning about the small account also, right? And further, BSBDA holders are not allowed, they are not eligible so as to open any other saving bank account in the same bank. So if you're having a saving bank account in the bank, you cannot be opening the BSBD account. Let's say if you have opened the saving banking in the bank and further you have also opened a BSBD account, then in the next 30 days, you have to close the previous saving account. You have to close the previous saving account and that would be done. That it has to be done within next 30 days, right? So that's about the BSBDA. So what is the restriction? No restriction related to deposit, but withdrawals are restricted to maximum 4 in number, including the ATM transactions. After that, it's about the small account. Now, small account is basically for low risk customers. Now, there might be the categorization of the customers. Categorization could be also be based upon the products, but here we are talking about the categorization based upon the customer. Now, customer might be the low risk customer, or let it may be the high risk customer, or it may be the medium risk customer. Now, based upon that, if a customer is there which is low risk customer but not having any of the OVDs, the customer is having no KYC documents with it, right? So it could be related to some unbanked area or rural area where uh, the customer is having no OVDs, that's no officially valid documents with him or her. In that scenario, the customer is allowed so as to open a small account. Now, small account is an account where some restrictions will be there. And in this scenario, the customer is to give just a self-attested photographs and the signatures. And the bank is going to give 12 months time period to the customer that you can be opening the account and operating the account with some restrictions. But within 12 months, the customer is to submit the KYC documents, the OVD, the official value documents. And in case the customer is able to deposit the receipt that he has applied for the KYC documents, the bank will further give him 12 months so as to procure the documents. So we can say the small account will be operable for the time period of 24 months. Okay. And what are the restrictions in it? The first restriction is related to the aggregate of all the credits. So the total amount of the credits which can be like credited into this account in the complete year, it should not be exceeding rupees 1 lakh. So in the complete financial year, you cannot be depositing more than rupees 1 lakh in total. And further also, the total withdrawals and transfers in month should not be exceeding 10,000. The total withdrawals and transfers should not be exceeding 10,000. Clear? That's also the scenario. That is also the scenario. The aggregate withdrawals or transfer in the month should not be exceeding the 10,000 rupees. So these are the restrictions related to it, right? And balance in the account at any point of time cannot be exceeding 50,000 rupees. So these are the prime restrictions. So the total aggregate credits in the financial year cannot be exceeding 1 lakh. Balance in the account at any point of time cannot be exceeding 50,000. And the total withdrawals or transfer in the month cannot be exceeding 10,000. So these are the restrictions. And the foreign remittances are not permitted until the account is not fully KYC equipped, right? And this account is, as I told you, is just valid for the initial 12 months. And further, the customer is to deposit the OVD receipt, and it will be operable for the next 12 months. So it is for 24 months, it is operable. And small account can only be opened in the CBS linked branches of the banks, right? So that you can do the monitoring of the such accounts. Play with it, and that will be all about this video. Thank you so much and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much and see you again.